Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
The big story overnight has to do with the US bond yields because they've spiked. They've hit a high of 2007, or rather since 2007. This is the highest level that these bond yields have hit. This is on the 10-year as well as the 30-year. The big update, of course, has to do with the labor market. The job openings are more than expected.
Absolutely. And with that as well, if you see in terms of global markets, a major downtick is what we are seeing
Yes.
in the US as well as Asia. You have your gift nifty as well, which is indicating a muted start on the back of this. So probably that selling pressure could intensify in the Indian markets as well.
Certainly. So 19,500 is what we defended on the Nifty 50 yesterday. Though we ended with a downtick of about 0.5%, the broader markets saw quite a bit of strength. Whether that continues in trade today is the big question. That outperformance is likely to be tested today. And that 19,500 mark in all probability, Hiral, right at the start is going to be broken.
It's going to be interesting because we did also hit a day's high of 19,726,
Yes.
right, in the intraday session. So that's going to be interesting to watch out for. Bank Nifty, we've ended with gains of 284 points. So again, the momentum in terms of Bank Nifty was stronger as compared to Nifty as well. And though you had an HDFC Bank which contributed the most in terms of the decline on the Sensex. Now the VIX, if you see, that is up for 5 days out of the last 6 trading sessions, right? So that volatility is actually constantly increasing. Probably how that augurs for the market is what we need to wait and watch and see. But the key events that we watch out for today is the Cricket World Cup that actually kickstarts today. So a lot of consumption-driven names that will continue to remain in focus as well. In fact, a lot of special stories as well as videos that have been done by our colleagues, Rishi as well as Saloni. You can find all of that. And how it will impact the economy as a whole on our website on bqprime.com. And you have the MPC meeting as well that is slated this week. So Friday is when we will hear as to what the RBI has to do as well.
If I remember correctly, the research that they've done indicates that it will be spending of $1.6 billion over the course of the World Cup. And if anything, that is a conservative estimate. If you want to find out what went into that calculation, I'd invite you to check out the website, bqprime.com.
Absolutely. And with this as well, it's interesting to see how your hotel companies, your aviation companies, your consumption-driven names, your sauce companies, you have your Devyanis, all of that probably will at least see some sentimental move because the bookings have already started much in advance, right?
Yeah.
So it's not something which will start having an impact immediately from today onwards.
Yeah.
All of that has been done now. Whether that will be reflected in the second quarter and some part of it in the third quarter, that's going to be interesting to watch out for on the back of the World Cup. But clearly, Alex, from a market's perspective as well, that muted move continues. Now, whether Bank Nifty will continue to outperform Nifty is what we need to see. And let's understand now what the F&O data is indicating. Good morning, Agam. Clearly, yesterday's session, we've seen Bank Nifty outperform Nifty. What is the data indicating if you have to look at the weekly options data now?
Right. Good morning. So right at the top, we are going to be focusing on the Bank Nifty because it is the weekly options expiry today. But to talk about the key benchmark with the Nifty starting, we've seen some amount of addition in open interest towards longs because we have in fact seen a good amount of increase in OI there. And as far as the Bank Nifty is concerned, where we're seeing a decline in open interest, so some positions being covered there as well. But do remember that we're coming off from the regime of the markets taking a step backwards and then taking a step forward. To simplify this, some may actually take this as a consolidation of sorts. So moving in, what we are watching out for, at least as far as the Nifty goes in terms of the levels, that once again has been shifted higher. So keeping an eye on 19,800, 19,700 calls where we've seen a little more writing. And on the lower end, it is the 19,500 and the 19,600 puts. Moving on to the Bank Nifty, and in terms of today's expiry, what we are watching out for is 44,000 500. That is a key number to keep an eye on. Well, we have seen a relatively broader range indicated by the maximum open interest, but for now, that's a 700-point range. But for now, 44 to 500 will be crucial. And finally, if I may add, we will be watching out for two stock futures: Nestle India because of the corporate action, and Bajaj Finance because of the quarterly update. I'm sure that we'll get those details in just a bit.
Soon, yeah.
But yes, they will also be very, very active in the futures and options space.
Yeah, the corporate action you're talking about is a stock split that is going to be considered soon. Absolutely. Thanks, Agam, for those updates. And Bajaj Finance, like Agam said, we'll get into that in just a bit. But before we do, let's take a check on some of the banks that have also reported their quarterly updates. Another big ones yet. You have the likes of Catholic Syrian Bank or CSB, as well as, in fact, IndusInd Bank that have reported their quarterly updates. Pragati is joining in to give you some of those details. Morning, Pragati. What are you picking up?
Yes, Alex. So, of course, banks are back in the news because one, the quarterly earnings are coming up, and secondly, some of the pro-tem figures are also out at this point. And not big banks like HDFC have brought them out, but some smaller ones like Federal Bank, IndusInd Bank, CSB Bank, all these figures have been published. The picture is largely not very different from the first quarter earnings, but yes, we do see something that is very interesting at this point. If I take these 4-5 banks into account whose figures have come out, we see very strong advances in the deposit growth, and it is looking extremely strong for CSB Bank and Federal Bank. They're quite literally leading the show at this point. And if I talk about the deposit growth as well, the latter is high, and it is being led by high cost of deposits and fixed deposits as well. The growth continues to be high, even though your CASA ratio is falling. And CASA is something that we've been talking about for multiple quarters now. And it has been under our scanner even for the first quarter. But CASA has been showing moderation for a lot of these banks, and this will be one of the metrics that we'll keep a watch on for the next quarter as well. If we talk about Federal Bank and CSB Bank, these are the two banks whose provisional figures are saying that the CASA moderation is the maximum. On the other hand, some other key metrics that are very important to watch out are, of course, the net interest margins, because a couple of banks, even like the HDFC Bank and the ICICI Bank, they have guided that they might see a moderation in their NIMs. And if we talk about the asset quality, that is definitely under watch, because even in the HDFC Bank AGM, everyone talked about that, yes, there might be some moderation in the asset quality. Coming to Bajaj Finance as well, like the figures have just come out, the provisional figures rather, they've just come out like 10 to 12 minutes back. The assets under management have risen by 33%. The momentum looks pretty strong there, and even the deposit book is up by 39%. Even the customer base is up by 21%. I'm sorry. So, I mean, overall, the picture looks pretty solid, but we'll have to wait for the actual figures to come out and to see what exactly happens on that front.
The breakdown of the numbers.
Yes,
That's going to
absolutely.
be interesting. And we have a Bajaj FinServ who's already got a GST tax demand notice as well. So let's see how that goes, because it's a whole host of companies that have received GST notices. I think no one is spared out of it. Absolutely. The numbers are quite substantial. Now, what happens to these notices? Because majority of the companies are planning to contest it as well. So that's going to be an interesting aspect to watch out for. But thank you, Pragati, for getting us the details. So the financial space will be a buzz as well as you have Bank Nifty weekly expiry. So both of them is going to be pretty much hand in hand in today's session. But moving on, a lot of other stocks that continue to remain in focus. Varsha has one part of the list. Varsha, good morning. What's on your list today?
So, starting with some auto companies, we have Maruti Suzuki, where yesterday company said that it has received a draft assessment order for financial year 1920 from Income Tax Department, wherein certain additions and disallowances amounting to rupees 2,159 crore with respect to returned income have been proposed. In response to this development, Maruti Suzuki has indicated that it will file its objections with the dispute resolution panel, and company has already clarified that the draft assessment order will not have any impact on the financial or operational or other activities for the company. Company recently received a show cause notice from the GST authority for the period from July 17 to August 22 in a matter of tax liability under a reverse charge basis on certain services. Then next we have Hero MotoCorp, where the company will start deliveries for Harley Davidson X440 from October 15, while new booking windows reopens on October 16. Then we have Adani Enterprises, where Abu Dhabi-based IHC Capital Holding LLC raised its stake in Adani Enterprises to over 5%. Now, IHC arm Green Vitality, along with subsidiaries Green Enterprises Investment Holding and Green Energy Investment Holding, acquired almost 0.06% stake, taking the combined shareholding to 5.04%. Last week, IHC said it would dispose of its investment in Adani Green Energy as Adani Energy Solutions as part of its overall portfolio rebalancing strategy. Earlier this month, two of Adani Enterprises promoter-owned companies acquired a total of 2.06% stake in the group's flagship company from the open market, and this took the total promoter stake in the company to 71.93%. Then we have Polyplex Corp, where the promoters of the packaging firm will sell 24.3% stake to Dubai-based AGP Holdco Limited for 1,188 crore. The deal amount has been revised downwards from 1,379 crore announced in May. Also, AGP Holdco will able to increase its shareholding in Polyplex, including through a call option from promoter group members for up to a total of 3,79,377 shares for the company. And according to shareholder pattern, the promoters hold 50.97% stake as on June 23. Then we have JSV Infrastructure, where Moody's Investor Service on Tuesday upgraded the JSW Group firm's corporate family rating and senior secured bond rating to BA1 from BA2 and changed the outlook to stable from positive. Now, Moody's attributed the rating upgrade to the company's IPO fundraising as outlined in the prospectus. Approximately 31% of this proceeds will be allocated towards debt repayment, while another 42% will support capital expenditure for upgrades and expansions. Shares of JSW Infra settled on the first trading day at a premium of about 32% over its IPO price. Lastly, we have Stride Pharma, where Stride Pharma Science Limited wholly arm has received approval from the US health regulator for its generic version of isoflurane ethyl capsules. Now, this has a market size of almost 1.3 billion US dollar. The company has almost 260 cumulative ANDAs filing, of which 230 plus are approved. Also, the company has targeted to launch 60 new products over 3 years in the US.
Interesting. So that last update. Any idea what that formulation does? What is it for?
So it is actually, the capsules are used to control triglyceride levels in the blood.
Triglyceride levels.
It's mainly for your cholesterol control.
Absolutely.
Tablets that you're talking of. And JSW Infra as well is interesting because yesterday when I spoke to the management as well, Alex, absolute confidence in the kind of growth prospects they do see with the kind of uptick that we are seeing, from an economy perspective. And secondly, they are very confident of maintaining the CAGR growth, or probably even outmastering that number that they've already achieved in the last 3 to 5 years. So that's going to be an interesting one to watch out for.
Certainly. Varsha, thanks so much for bringing us those updates. Let's keep taking stock of all of the stock-specific action that we've got in terms of news. And there's a lot to talk about. Saloni is joining in next to add to the list. Saloni, morning. What are you picking up?
Morning. So first we have two rail companies. So first is Rail Vikas Nigam. So the company bagged an order worth 444 odd crores from the Himachal Pradesh State Electricity Board. So this order is for the development of distribution infrastructure at the north zone of Himachal Pradesh. This is a general condition contract that is executable in 24 months. And the other one being Titagarh Rail Systems that bagged an order worth 857 crores from the Gujarat Metro Rail Corporation for the manufacturing of 72 standard gauge cars for the first phase of the Surat Metro Rail. So the execution will begin 76 weeks after the signing of the contract, which will roughly be in the beginning of FY26. And this project is expected to be completed 132 weeks after the commencement, which will mean that the company will see revenue recognition from this project over FY26 and 27 as well. Then we have Nestle. So the board of the company is to meet on October 19th to consider and approve the stock split. In case the board does not does approve a stock split, it will be the first one that the company has in at least 2 decades. Also, we have two companies in the diversified retail sector that just released their second quarter performance. The first one is Avenue Supermart, which is D-Mart. So the standalone revenue of the company was up 18.5% to roughly about 12,300 crores on a year-on-year basis. And the total number of stores as of September stand at 336. Then we have V-Mart. So the revenue of the company was up 7% to 550 odd crores. So during this quarter, the company opened 8 stores and closed 2 stores, taking the total number of stores as of September to 437. Additionally, the company's newly established warehouse facility has been operationalized during the quarter. We also have a quarterly sales volume performance of APL Apollo tubes. So the company's sales volume was up 12% the quarter on this quarter to a record high of 6.74 lakh tons. The contribution from the value-added segment was stable at 55%, and the company also said that the sales mix should eventually move towards 70% for value-added products. The company also said that they are encouraged to see strong sales growth in the heavy structural steel tube that contributed to 7.6% of the company's sale this quarter.
Right. So overall, a lot of companies on the quarterly updates continue to remain in focus. Railway continues to remain in focus as well. Thanks, Saloni, for getting us the details. But moving on, a whole host of financial names along with the quarterly updates that are in the news today. Mihika has that list for us. Mika, what are you picking up?
Okay, so first we have HDFC Bank that made changes to its top management after the mega merger. The bank sent a detailed memo to its employees listing the major changes in its personnel. Ashish Parthasarathi, who has led the bank's treasury since 2009, will now head the key retail branch business, which handles deposits and product distribution. And Arvind Kapil will take charge of the bank's mortgage business. The bank's last major restructuring was in May 2021, focusing on business verticals, delivery channels, and technology. Then we have Bajaj Finserv, whose material subsidiary Bajaj Allianz General Insurance received a 1,010 crore rupee show cause come demand notice from the Directorate General of GST Intelligence under the Section 7310. The notice pertains to the non-payment of GST on co-insurance and reinsurance premiums. Then we have Muthoot Finance. The shareholders of the companies have passed a special resolution that increases the borrowing powers of the board directors to rupees 1 lakh crores. And then we have ICICI Bank that has raised rupees 4,000 crores by allotting 4 lakh senior unsecured redeemable long-term bonds on a private placement basis. The bonds are redeemable at the end of 10 years and have a coupon of 7.5% per annum payable annually. And the company will use these funds to raise further, to facilitate further business growth. And lastly, we have IDFC First Bank, which launched a QIP on October 3rd. The QIP aims to raise rupees 3,000 crores, and the base price, according to the pricing formula prescribed by SEBI, stands at 94.95 per share, and the bank may offer a 5% discount on the floor price at its discretion.
Absolutely. So quite a lot of updates in the financial space, and we're not done yet. Thanks, Mika, for that update. We are, in fact, focusing on IDBI Bank as well, because source-based information coming in from New Delhi suggests that the government may not, in fact, complete its stake sale in the bank this year either. And that has implications, of course, for the divestment target. Janani is joining in to give us more perspective on that. Janani, you've spoken to a couple of people. You have these key details. What are you picking up?
Good morning, Hiral and Alex. Right now, we're picking up that this year, the completion of the IDBI stake sale might not happen. Now, remember, there's a 61% stake of the government and LIC put together in IDBI. And of course, this naturally brings the question of the fiscal deficit and of the disinvestment target. Now, when I'm talking of the target, there is a 51,000 crore target for the entire year. But so far, until September, if you look at 6-month figure, we're seeing that only 6,900 and about 49 crore has come in through OFS, employee OFS, and other methods. So this already shows that the pace has been lagging in terms of the disinvestment receipts. Coming to the fiscal question, is this going to affect the fiscal math? Now, sources also tell us that, the aggregate non-tax revenue and the aggregate total disinvestment proceeds might actually pick up on any shortfall that might come about. And also we're seeing healthy bank dividends that have been coming about. Also the RBI surplus that was, received earlier this year, 87,000 crores. So that is a big number that is more than, the disinvestment target that could, of course, come and help in terms of bridging that gap. So far, if you look at the total, DPOM receipts, as they call it, it's come up to 23,207 crore. This is bank CPSC dividend plus the disinvestment proceeds. So that's how things are shaping up right now. We'd have to see how much it would reach up to till the end of this year. But in terms of IDBI, like you pointed out, it seems very unlikely this year. That's what we're getting to hear.
Right. Thanks, Danny, for getting us the details. And this is going to be interesting to watch out for, because since quite some time there is this chatter which is going on wherein the ITPI divestment will probably fructify only in FY25, right?
Yes.
And the amount that they're looking at from the stake sale as well is pretty much pretty large, in that range of almost 15 to 16,000 odd crores. So let's see how this actually impacts the divestment target of the government as well. But moving on from the financial space, one of the sectors that will start reporting earnings will be IT from next week onwards. Tushar is standing by to get us more. Tushar, good morning. Clearly, if you have to look at the second quarter, July to September, you have the IT index which has outperformed Nifty. Does that really correlate with the earnings? Or there is no correlation between that outperformance from a stock-specific perspective versus what the companies are expected to announce?
Very, very evidently shaking his head.
Like,
So
just
the outperformance that you see in the Nifty IT should not be seen as reflecting in the results at all. I mean, not even going into saying into 2 to 3% quarter-on-quarter growth either. So the two trends that you'll see in in IT earnings this quarter would be more of the same weakness that was seen in the fourth quarter of the previous fiscal, that's January, March, and the first quarter of this fiscal, that is April, June. So what are we looking at right now? So that is the more of the same weakness that will keep on continuing, and we'll have slower for longer growth given how Accenture results have panned out. So Accenture has guided for 2 to 5% revenue growth in its fiscal ending 31st August 2024, which effectively means that for Indian IT, half of the year is still gone. But what are the key things to watch out for in this particular quarter? First is the pace of deal to revenue conversion. That's not happening. So there are large deal wins, but they're not converting into revenue. More so because of the fact that these are longer term deals and not discretionary deals. Second is the state of discretionary spending. Are the short term deals coming through or not? We have seen again like long-term deals coming in, which are spread over several years, but the snap return, the deals which can give you snap returns, the shorter duration deals, that are not happening yet. What we also want the management to comment on, how do they see the demand in the beginning of the beginning of calendar year 2024. That is also one thing to watch out for. We also have to see the state of the demand in key verticals, BFSI, manufacturing, high tech, etc. There is a certain amount of weakness in all these verticals for these companies, 1 to 2% growth or 3% growth at the most, quarter on quarter. Another one is to look at the deal pipeline. So the deal pipeline is still healthy. So, but again, that is still not converting into revenue. So we want the management to comment on how the deal pipeline is shaping up for the rest of the fiscal. The next question is about generative AI. Are there productivity gains being seen? Again, Accenture in its quarterly update said that the large size deals are not coming in. Smaller size deals, which are about $1 million in value, those are coming in. Will there be a change in guidance? Infosys has said that it plans to grow now after the end of the Q1. It said it plans to grow at 1% to 3.5% FY24. SCL Tech 6 to 8% FY24. LTI Mindtree, in our conversations, they said double-digit growth is completely out of the question in FY24. So will there be another change in guidance, another revision as guidance? Is that what we want to watch out for?
Okay.
In terms of companies, we again have to see whether Infosys HCL will revise its guidance. We have to see whether Wipro has addressed its revenue conversion problem. TCS has ended its work from home just last week. So we have to also see for the fact that whether that is aimed at increasing its utilization levels, because they were about 80%. And for the industry bellwether, who has about 6 lakh people on its rolls, that's quite less. That's 80%. So you say talking about 4 lakh people fully utilized, 2 lakh people still on the bench. Tech Mahindra badly in the doldrums. They have a new CEO. So we have hope. We want to see what their plans are for the company after Mr. Gunani goes away in December. LTI Mindtree, again, they have already said that double-digit growth is out of the question. Will there be another division lower? We have to wait and watch out for that.
Okay, so quite a few question marks there at the start before we see these numbers pan out,
and a lot of not only from a numbers perspective, but a lot of segmental perspective, where we're expecting changes, how the new leadership will pan out from a strategy perspective, how the work from home to work from office will actually impact the utilization. So multiple parameters, and that's a good takeaway as well, Alex.
Certainly, and more importantly, I think for me, I will be watching out for guidance as well, considering that Accenture has cut its guidance since we heard from these IT companies.
It's disappointed. So.
It has. Thanks, Tushar, so much for those updates. And another takeaway from that, and you just mentioned people coming back to the workplace, that also has implications for commercial real estate, because in a lot of circles, Bangalore or Bengaluru in particular, you have question marks about yields going forward, or you had, and now with people returning to the workplace, perhaps that is going to change. But let's turn attention finally to the primary markets, because as you've probably been seeing over the past few weeks, there has been a lot of action today as well. You have a new listing in the form of Updater Technologies. We'll bring you an update on that as well. Rishi is joining us to give us some perspective on that. Rishi, what are you picking up?
So it's Updater Services, and its IPO is listing today. It was subscribed to almost 3 times when its IPO opened, and the issue size was 640 crores, and it garnered about 288 crores from anchor investors. The IPO price band was 280 to 300. Now, Updater Services is an integrated business services platform that offers integrated facilities management as well as business support services. It offers a variety of services from audit and assurance to employee background check services to also mailroom management services through a lot of its subsidiaries. Its revenue has been growing at a healthy rate over the past couple of years. It grew from 1,200 crores to about, it crossed the 2,000 crore mark in FY23. Its margins and profits are, however, showing a downward trend, which may be a cause for concern, and it is something to look out for. Among its peers, listed peers, it would include Quest Corp, SIS, and Teamlease Services. Now, Updater Services will be the smallest company among these 4. With a market cap of 2,000 crores at the upper price band. Now, relative to its market cap, its revenues are pretty high. It's as high as its market cap, and compared to its peers, it's pretty high. But valuation-wise, it's pretty expensive compared to all other peers, with a PE of 44.8, again at the upper price band. Now, among other IPO offerings, there's also Plaza Wires. It's the last day of the IPO today. It has already been subscribed by almost 27 times. It's into the cables and wires business. And it is a 72 crore IPO with a price band of 51 to 54 rupees.
Right. So I think multiple updates in the primary market as well. In fact, with regards to Updater as well, Himansh will be speaking to the management as well post listing. So it's going to be interesting to see what the management has to say, because initially they usually don't give you the guidance ahead of the listing. So probably some commentary from the management will be interesting to watch out for. So please stay tuned to BQ Prime. But thank you, Rishi, for getting us all the details. And Alex, from a markets perspective, an absolute, it seems like a no-brainer now that we could see some bit of selling pressure that could continue. But whether Bank Nifty will come to the rescue, taking the F&O cues into consideration and the weekly expiry, is going to be interesting to watch out for.
Certainly. And you'll find all of that action live on BQ Prime in just a few minutes. So do stay tuned for that. Thanks so much for watching. This is BQ Prime.